Hello guys, how are you?
He's
ASP.
in, man. Very good, bro. This is our boy.
Yes, yes, I'm back.
Let me record. Um,
Yeah, okay. Okay.
I've
On
never
his show
spoken
pass
to
now.
Uspe, yes. But anyways, uh, yeah, SP, you're talking to the other guy, they're on Facebook. Yeah, the one and only, the Utano
Yes, yes,
Swain.
yes, CJ. CJ.
Yeah, Utano Swain. Anyways,
Yeah, 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 yeah.
my strategy is based on mechanical rules, which is basically based on market structure, right? So I'm teaching you the mechanical side of market structure, which later on we're going to be talking about another kind of market structure, right? Uh, which combines fundamentals if
Sure.
you are interested in trading news and all that. But then me personally, not interested, right? But then I'm just gonna show you the ropes on how it works and how to
Sure.
see where the news is going and so forth, which is the funky stuff, the nice stuff there about the chart. If you're interested in NFP, core CPIs and all that, I'm gonna teach you how to read the news
Yeah,
and combine it with the technicals. But then the strategy is based mostly or based on
I'm
mechanical
taking cards.
rules, yeah, which is technicals, purely technicals, right? And hence why I was purely
Yeah,
suggesting Derive. It works everywhere basically, but then Derive is the smoothest I've been, right? I can actually go live the whole day and call out every movement on Derive, which is never gonna be the
and that's
first time I've
crazy,
done
yeah.
that. Yeah, that's the craziest part because I know it's catering purely for technical traders. But then let's not go to the other topics there. Let's stick to our market structure. So, Spay, we had our highs and lows, right? So we explained our highs and lows based on my approach, right? Which is
Okay,
our
Okay.
A's and V's, right? So our A's are actually representing our highs, then our V's are actually representing our lows, right? That's the strategy, right?
hmm
That's how you see market structure based on the strategy to make it simpler for your eyes to recognize, right? Because teaching you what an actual high is, like in the way other people teach it, is actually hard to understand. But then me saying V's and A's, you easily see a V and you easily see an A on the chart, right? Based on my drawings. Obviously, my V's and
exactly.
A's are a bit disabled. They are disabled alphabets there. As you can see, one has a huge arm and the other has another huge leg there, right? So, but then it makes it easier for someone to actually recognize, oh, I'm seeing an A there. That means that's a high, right? So whenever I'm saying that A, you know I'm referring to a high. And whenever I'm saying that V, you know I'm referring to a low, right? So,
No, please.
Okay.
oh, bro, I'm recording on my side, so it doesn't make sense for you to record your side as well. ASP.
Oh, okay, 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 bro. No
Yeah,
problem.
I'll send you the video afterwards. So,
Okay, okay, cool.
yeah. So obviously everything on the chart has rules, right? So my simple rule for now, without getting into too much technicals, is for every A you get a V, right? So for every A there's a V going along with that A, right? And for every V there's an A going along with that V, right? Which is obviously vice versa, right? For every A there's a V, and for every V there's a A, all right? Basically, that's what I'm saying. Then
Okay.
the first rule is, which is still in theory for now to you guys, is whenever we have an A that gets broken, in this case a high that gets broken, we expect to get a V, right? We expect
Yes,
to get a
yes,
V,
yes.
Yes, yes, yes.
and we're gonna use a way in order to get a V, right? So I'm just going to give you an idea based on similar to this kind of drawing here, right? We say if we're getting an A that is getting broken, that means the candles or price is moving above that structure, which is that A, we know whenever it's retracing back or doing a pullback, we're gonna be having a V, right? Basically, we're gonna be having a buy. All right.
Yeah.
So
Yeah.
let's put it into action. We want to put it into action, not just say random words. So let me delete the drawings. So the first thing we're going to be looking for is an A,
Okay.
obviously, right? That is getting broken or price moving above that A. So in this case, we do have that A there. Where do we have it? We do have it here. So do we agree that this is an A?
Yes,
Yeah,
we
yeah,
do.
yeah. Exactly.
And that A actually gets broken, right? Gets broken where? Here above, right? As the drawing.
Yeah.
So in order for you to find
Yeah.
an area where the V is gonna form, you're gonna actually use the candle that breaks above the A and go below that candle, right? So in this case, we place
Okay.
our line there, which is below the candle that breaks above the A, as you can see, right? This is the same candle right on daily, and we go below it. Then we can actually start finding an area where the market is actually gonna start buying, which is this area here, right? As you can see, for this A, let's do the drawing. For this A, after it got broken, we got a what in return? We got a V in return, which is this V here. Does that make sense?
Oh,
Yeah,
yes,
it
it
does.
does. It does.
Right? For every A that's being broken, we get a V in return, right? So that's the basic principle
Sure.
of the approach. Is for every structure that is being broken, you can actually get um, an output, right? So it's an input-output system, right? So market structure is always respected. Hence why I'm not using price action, the funky stuff there. I'm using market structure. I can't manipulate market structure. Market structure still stands. If the market
Yeah.
has to go up, it's gonna go up. Hence why I'm confident to even go live and actually
Okay.
tell you that it's gonna go down for today. Then people are like, this guy. Then it goes down. Then I'm like, I told you, right? Because it's market structure. It's not even me. It's market structure, right? So
Mm,
let's
Okay.
continue.
Okay.
Let's continue. Let's continue. We're
sure.
still looking for an A that gets broken. Remember, we still want to prove our theory there, right? We want an A that is getting broken. So let's see if we do have an A that is getting broken. So I'm looking for an example. We already used this one. Let's see. Okay, we use this one. Let's see this one. This one wasn't broken. This one, yes, this one was broken. So we can take that one. All right. So price has moved above that one. Where? Here. All right. That's an A. In case you are wondering, let me just show you on 8 hour where it's looking six. Right. That's an A, by the way. All right. So do we agree that's an A?
Yeah.
Yeah.
Perfectly. So
Yeah.
Yeah,
right,
it's
that's
me.
an A. What happens to that A? Price moves above it, that A, right? It moves above that A, right? Using which candle? On 8 hour, it's actually this candle, this candle. So we go below that candle, which is this candle here, below this candle, right? The bluish candle here,
Mm,
right? We go below it,
yeah.
right? Then we actually highlight the area. So I'm just gonna skip a step here for now, right? Because this is doing other things. Just gonna skip a step there just to give you an idea. So we actually have an area here below, which is this area here. We can make it smaller, obviously, but then I'm just
Mm,
giving you the
yeah.
idea for now. All right. Let's go back to 8 hours. So I was just trying
Yeah.
to show you that area, which is this huge area here for now. You can make it small. So we have that A, it gets broken. And what did we say about when an A gets broken? What do we get in return?
Get a reaction.
We get a V,
A
right? We
V.
said for every A that gets broken, we get a V, right? Hence I
Yeah.
was saying it's our theory for now, right? Here's our A. The A gets how it gets violated where here, and in return we have a V, which is this V here. Although it's not a 6 on this time frame, but then let me show you on 1 hour. I think it's much sexier there. Okay, we have like double V's there. Still a V at the end, right? You still get a V in
Yeah.
return, which is what we are looking for, right? Although it's two V's combined there. Let's say on 2 hour. I want to for it to show the sexiness of the chart. So we get a V in return. Basically, that's a V, right? Although it's two V's combined, right? Much more like a W. But then at the end,
Yes.
it's giving you a V structure, right?
Yes.
You can
Yeah.
use it individually. You can use this one or that one, but then at the end we get a V. So We can even use this one, it's still fine. It's still a V, which is those drawings I was drawing at the beginning of the previous session there. Right, as you can see, this is a V, which is this V here, right? As you can see. Same as the drawing, always. All right. And we have that A getting broken there. And we get a what? We get a V in return, which is our basic principle. But then we want to test it up until we get tired of it, right? So we already moved from this A, we are
Yeah.
moving to that A now. We are doing every A that we
Mm.
are seeing on the chart, right? Which is this A, so much more likely you're gonna see based on 4 hour much better. So you can see that that's the A. Perfectly so. All right. Let me delete these lines or the other drawings there. Okay, let me delete them individually. All right, we have that A there. It's getting broken. Where? Here. So here's the A, by the way. So let me zoom in so you can see it as well. Right here. Here's the A. Let me make the line a bit thicker. Yeah, I think it's thick enough. All right. Here's the A. It gets broken. Where? Here. Broken by which candle? By this candle on 4 hour. So I'm gonna do Ropan business again, right? I'm gonna just skip steps just to give you the idea that for every A that is getting broken, you get a V in return, right? So I'm just gonna skip steps for now. For now, just to give you that idea. Because I'm passing through the idea, we're
Okay.
testing out the theory. We're not yet on the strategy.
Okay.
All right. Here's our A. Gets broken by which candle? That
Okay.
candle here, right? Which is this candle. So we take our line, we put it below that candle. It's below that candle. Then we map out the zone that we find there. In this case, it's an order block. We map it out.
Yeah, I can see the other block.
All right.
Mm.
So our theory still remains true, right? For
Yeah.
every A
Yeah.
that gets broken, as you can see, that A, which we found on 8 hour, we have a V in return. So here's the V. All right.
Yes.
Although it's multiple V's, but then it's a V at the end, right? So our statement still remains true. For every A
Yeah.
that is being broken, you get a V in return, right? Which is what we are testing out. As you can see, this A got broken, V in return. A gets broken, V in return. Always, right? Always, 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 always. That's the case. Always. It never changes.
Yeah.
That's
Yeah.
market structure. That's the dynamics of market structure, like the deep part of market structure. I know it's dumb, but then trust me, dumb things work on the chart.
It's fair.
The dumbest things you never thought don't work, they work. So let's continue. Yeah, like the dumbest things work. I don't know like how to explain. I'm just saying like the way it is. So okay, fine. We've proven that for every
Are you
A, for
bro?
every A that
Yeah.
gets broken, we have a V. So now let's talk about a V. What happens when a V is getting broken? All right,
You get an A.
we get an A.
Get an A.
We get an
Yeah.
A. So let's prove it on the chart. We want to prove it on the chart, right? Let's prove it. Prove it. Where's the Okay, I'm just going to use the current market price data there so you can just laugh. We have a V. I'm seeing a V here. I'm seeing a V here. Hopefully you can see it as well. I'm seeing a V here. All right. What
Yeah.
does it? What happens to that V? It gets broken.
Broke.
All right. When it gets broken, so I'm just going to
Yeah.
skip steps just to show you the A. So here's our V. Remember, here's our V. And we go above the candle that breaks the V. In this case, this is the candle that moves past the V, and we place our line there. Then we map out a zone there. So, by the way, this is an order block. It might not seem like an order block to you now, but then that's an order block. So that's where the market is actually going to be selling from, by the way. So, and currently is selling from, right? Has sell from, sold from, it's going to continue selling from, right?
Yeah.
Mm.
So
Yeah.
remember,
Yeah.
I said what? For every V, there's an A, right? So this one is the first A, as you can see. First A, all right? Let's go back to our time frame there. So you can see that V that they broke, obviously. So here's the V. So this is the V they broke. What do we get in return? we get an A in return, right?
A.
So this is the A.
Yeah.
This is the A in return. So our statement remains true again, right? So now you already have an idea of what's actually happening. So I'm gonna ask you a hypothetical question, right? Just to test out
Okay.
Yeah.
your understanding for now. So let's say price moves above this A. What are you gonna get in return?
A V.
Not get a V.
You're gonna get a V, right? So now you can start drawing random lines
Yeah.
according to other traders there on Facebook. They see random lines. They can't make sense of what we are doing, right? So whenever price is moving above that A, we can actually now know it's gonna go back here and create a V and start going up.
A V.
Oh,
Hey, this is
okay.
deep.
Right?
It's ringing a few bells.
Right? It's an open book now. The market is
Yeah.
starting to become an open book, right? You can now start seeing for the
Yeah.
market for what it is. So they, oh, okay, this is how, okay, right? And we can even do it on a smaller time frame,
Yeah.
right? This thing actually works on a smaller time frame as
Yeah.
well. But then that's for you if you want to if you want to be scalping and doing other fancy things there on the 1 minute time frame. So let's continue
Yeah.
proving our theory again. You're gonna go back to this, obviously. Let me just take a screenshot. Obviously, it's gonna happen, but then to take a screenshot, I'll send it to you guys so you can watch it and have fun, right? So it's gonna happen
Yeah.
either way. So let's continue proving our theory. Let me delete everything. And since we've moved from this V here, we have another V here that we are seeing since we're on M15. So we have this V here. Do we agree that this is a V?
Yeah. Definitely.
Yes. Yes.
That's a
It's a
V,
V.
right? That V gets broken, right? Which is what we want to see. We want to see it getting broken, right? Gets broken by which candle? In this
Yeah.
case, by this candle. Let me zoom in. Uh, Slightly wicked it, right? With a wick there, which is this candle. Then we take our line, we put it above there, above the candle, right? That broke that V. Again, I'm
Yeah.
gonna skip a step just to find the area, not just throw a random zone that's big, right? So I'm going to a much lower time frame so you can see the dynamics again. Here's the dynamic again. You have a V that is getting broken. And remember, what did we say about a V that is getting broken? What do we get in return?
Get an A.
Get an A.
Exactly. So here's our V, gets broken. What do we get in return? We get our A, which is this A. Bit by bit, the puzzle is actually showing itself, right? So just
Yeah.
off a
Yeah.
simple rule, just a
Yeah.
simple rule, right? Hence why I'm saying it's a mechanical strategy because it uses a simple rule. So let's see if we can do it again on a much lower time frame, right? Because we are using M15. We started using daily, if you remember. We want to use it on a much
Yeah.
lower time
Sure.
frame. Let's go straight to 1 minute. So yeah, here we are on 1 minute. We're gonna use present current data there on the chart. So we have a V here on 1 minute. Do you agree that this is a V?
Which one?
Which one?
Just true. This one,
Yeah. That's definitely a
Okay.
V.
Okay. Yeah. Yeah.
this V.
That's a
Let me
V.
put it. That's a V, right? It gets broken
Sure.
Yeah.
here. And when we go above the candle that breaks it, which is this one, in this case, this one, we map out a zone, which is what is currently happening, although it's a much bigger zone, right? We map out a zone based on that. But then it's a small zone given that this is happening on M1, but then it looks slightly bigger, right?
Yeah.
As you can see, we map out a zone where
Sure.
we're actually gonna be getting our A. So we have a V there that gets broken, and in return, what do we get? We get an A.
Get an
An
A.
A. And the fact that we're actually seeing this melting right now is crazy.
It's super crazy, man. It's like,
It's
yo,
crazy.
yo, it's like APC.
All right. So now
Yeah,
you can
yeah, yeah,
start
yeah.
like piecing together what the
This is
market is
insane.
actually doing, right? So,
Yeah,
what else do I want to mention here? Oh, already we've proven our theory, right? Of saying for every V that gets broken, we get an A, and for every A that gets broken, we have a V, right? Now you can now say,
yeah,
okay, fine. Since I have an A here that has already developed, you put your line there and say, oh, so if price is gonna be breaking above, if price is actually gonna be breaking above my A there, is actually gonna do a pullback, then give me a V, which is the very same thing I was showing you before, right?
Heavy.
So already
yeah,
you know that, oh, when that A
Yeah.
gets taken out, I'm expecting a what? A V in the return, right? So you can take a
Heavy.
screenshot of that and actually see if that is actually true. All right? Because it seems like I'm cherry picking
Yeah.
things, right? I don't want to be looking like I'm picking things that are already happening on the chart. So, okay, fine. We have our theory down. We know what is happening and so forth and so forth. Obviously, you have another A here and stuff gets broken by which candle, this candle, and you have this area here, which I wanted to throw so badly. But then, yeah, I wanted to throw so badly. But then you already know, right? But then this is for scalping and so forth
right.
and all that. But then that's for you to investigate on yourself, for yourself there. All right? Same
Yeah,
same
bro.
approach,
So,
same.
so can I ask a question?
Yeah, you can, bro.
Yeah, man. So from your experience, does the approach or strategy rather work better on the lower time frames or the higher time frames?
Both, bro. It depends on what you understand. Even right now,
Oh,
um, even right now, if I was about to take this sell, I wouldn't hold it much. Why? I have a closer setup for that sell, right? Which is this sell here. So it wouldn't make sense for the market to just
yeah.
do a quick reversal. Meanwhile, it has already came from a sell area here, which is the sell area here, right? So I'll take this as a
Oh, yeah.
scalp, not target very far, right? And so I was like, if you like doing the fancy scalping things, take a few dollars there out of the market, you can actually start doing 1 minute, and you can actually swing with using 1 minute, right? It depends on what you understand, right? And
Yeah.
how far you understand the strategy, which
Uh-huh.
obviously comes with time frames, on how
Experience.
to use time frames, how to
Experience.
see, no, not basically experience,
Okay.
how to see swing structure, how to know you are going against the trend and what to do when you are going against the trend, which is counter trend trading basically,
Oh,
right? You're trading against the trend. You know very well that okay, it's going your direction, but then where to target, right? And so forth. So
yeah.
there's a lot of things happening, right? There's a lot of things happening in between.
Yeah.
So yeah, it goes deep, but then this is just a formality to say you know very well for every A that gets broken, you get a V, and for every V that gets broken, you get an A. That's just the formality of the
Okay.
strategy to get you in tune with how the market moves, the dynamics, right? So you know that you are getting what
Yes.
you are getting
Okay.
there on the chart, not just saying we have like 8 minutes, by the way, not just
Yeah.
not just seeing random movements on the chart, because a lot of people see random movements on the chart. When on your side, you can start making sense of whatever movement is happening on the chart, right? Based on a simple rule, all right?
Yeah.
So a lot of people will see this
Yeah, yeah.
as the reaction, and they don't know how did we even get to here, right? Or how did we even get to there, right? They don't understand that part. But you on your side, when you've already got some bit of knowledge of how the market works, you can now make sense of these movements here and say, oh, I understand why it's doing this, right? Now you have
Yeah.
an
Yeah.
understanding, a basic understanding, basically. So yeah, and this is another good time to ask a question because there's nothing more to say for now for this session.
Hey, this is deep, man.
Is there any question you
This
have,
is
Yeah,
guys?
deep.
it's really it's deep.
So,
So
I have a question. So,
Right.
how do you actually maneuver through the time frames? Like, let's say maybe you analyze maybe using the 4 hour, maybe you see a V getting broken. Then for the entry part, do you actually make the entry on the 4 hour or you jump into the 1 hour or the 2 hour because there are many time frames here, you see? So yeah, that's my question, by the way. Because maybe let's say I see an order block in the 4 hour, but maybe if I jump into 1 hour, you see, I see other things,
I get you.
something like that.
I
Maybe
get you.
let's say yeah,
I get you. I understand your question. So I'll actually it's your answer is gonna be a bit big, but then I'll try to make it easier to understand. So time frames are used for you to see what is actually happening on the market, right? To see where the buyers and sellers are coming in, right? So
yeah,
time frames are there for that, right? So when you are on daily, so I want you to think of it this way. So when you are on daily, please take it as if it's a picture of yourself, right? You're looking at a picture of yourself, right? Either you're on daily,
yeah,
weekly, monthly time frames. Just take it as if you're looking at a picture of yourself, right? But then when you start going to 8 hour there, 4 hour, 1 hour, it's you zooming in into your picture, right? You are zooming in into your picture. When you are zooming in
mhm.
into a picture, what are you looking for?
details.
Details. So time frames are there for
You're
details. The
looking for
smaller time
details.
frames you are
Okay.
going down on, they are there for details. So whatever is happening on 1 minute is actually happening on 1 hour. So it doesn't matter where you execute on, right? When you're on 1 minute, you're just looking for the details,
Okay.
basically, right? You're looking for the
Yeah.
details to say, oh, I'm seeing, okay,
Yeah.
oh, it hasn't confirmed that it's actually going up. You can now start waiting, right? Or you can now start knowing, okay, I'm going to take this as a scalp. I'm going to take this as a what? Because you are seeing the details, right? You are on 1 minute. You can actually time the market now and say, okay, I can actually say I can take this small buy there. As I've just explained here, as you can see, I already know what's going to happen, right? I'm just saying, I'm looking at the details and I'm saying, okay, I have a zone here, which is a sell, and I have a bit of a buy here. It wouldn't make sense for me to buy here and hold. Why? I've already had a sell here, and they're too close by, right?
Yeah.
So you are looking at the details now.
Yes.
Yes, you are becoming much aware of what is happening there on the charts. You are looking at the details. So on daily, obviously, you
So
see a picture of yourself. You're seeing a picture of yourself, but then when you are starting to zoom in, you are seeing that, oh, I was wearing a watch or a bracelet or a chain, or there's somebody on the background. He was wearing this and so forth, right? You can now start seeing extra details, right?
Yes.
So time frames are there for details. So it doesn't matter on where you execute, it's how you find your setup and how you understand your setup. But then, okay, fine. There's ways to find your setups and verifying how long should you hold your setups. So let's say you're doing a trade on daily, right? Let's say you're analyzing daily, right?
yeah,
Let's
yes.
Yes.
let's do daily. Quick. Let me delete everything else here. Right. Let's say I want something that has already happened. I don't want to do new things there. I'm not allowed to give signals, by the way. Um Yeah, because it's gonna be a signal. I don't want to do that. It's not recommended. Let me look for an A there that gets broken. Do I like this A? I like it. Okay, fine. I'm using that A there, right? I want to find this movement
Yeah.
here.
Yeah.
Right? I'm on daily. Pay attention. I'm on daily. So since I'm on daily, I can actually use 8 hour and 4 hour to find my zone there, right? So time frames go in three. It actually say 3 sets. They actually
Okay.
go in three. So whenever you're looking at daily, you can use 8 hour and 4 hour. So I'm on going to 8 hour to find
Okay.
my zone there for that A. Here's that A we're talking about. All right, as you can see here, I'm not seeing any type of zone. All right, so I can use my 4 hour. So that means the zone is there. It should be clean. It should be clean. All right, I'm looking for where the setup is clean. So as you can see, here's my A again. It gets broken by which candle? By that candle. That looks like a dragonfly candle there, right? Or a doji there. Put our line below there,
Yeah.
right? Then we map out our zone, which is below, obviously, the candle that broke our A there, which is this black line here. All right. Then you find this buy here.
Yeah.
All right.
Okay.
If you are doing a trade on daily,
Yeah,
as you
definitely.
can see, this is a swing on daily, although we are doing it on 4 hour, right? This is how you combine time frames, by the way. So it's a swing. But then if you want to time your entry there, right? You can actually start going straight to, let's just go to
Yeah.
5 minutes. We're having a bit of time thingy. I don't know if you want to continue this session using another link or another meeting. I'm not sure. Do you want to do
Yeah,
that,
we can.
gents?
Yeah,
We
but
can.
if you're not busy, we can.
If you're not busy, we
We don't
can.
mind.
Okay, we're gonna continue around 10 minutes time. I'm gonna take a bit of a break, then continue in 10 minutes time.
Okay.
Talking about the very same setup that is
Okay, no
actually
problem.
No problem.
we're actually looking at, because we have like 1 minute left there.
Okay.